All right, Charles, welcome to the WealthTech podcast. I am happy to have you on the show. You are the CEO and co-founder of OSYTE. OSYTE is an AI-enabled multi-investment and liquidity management platform. There's a couple things that really interest me about that. One is obviously your founder's journey, but the fact that AI is certainly a hot topic and it's kind of revolutionizing all phases of wealth management, including the front office, but also the ability to kind of better manage multi-asset class portfolios, which really have been a struggle, particularly for family offices, but for outsourced CIOs and other multi-asset class LPs. The ability to just effectively manage kind of around the process and be able to meet compliance and to be able to have the proper liquidity needs and even be able to have that transparency has been a struggle. Can you just give a brief introduction of yourself and a little bit about OSITE?
Yeah, absolutely. Well, first of all, it's exciting to talk to you, Mark. So thank you for having me on the podcast. I'm an allocator myself. I was a head of portfolio management. I was a senior portfolio manager at Russell Investments and other OCIO teams, where I worked with these large allocators, endowments, foundations, who are allocating capital to pretty much anything under the sun: public markets, private markets, liquid securities, illiquid securities, even derivatives, right? And the thing that I really found as part of my experience working with these large allocators is that the investment decision-making process is very siloed. You may have an asset class team by asset class team. The data is sitting in different silos. And so, what may look great at a manager level or an asset class level does not really translate into the total portfolio risk and return objectives that the ultimate, client asset owner would like to have. That was the core takeaway for me. So, and that was one of the leading causes, that we thought, okay, we're not the only investor who was struggling with this, and that was one of the founding reasons for the site.
Great. Can you tell me a little bit about your founder's journey? Obviously, you talked a little bit about this gap that you've seen in the market. You were experiencing directly. But really, what caused you to say, hey, there's really something here, and I'm going to make the leap? And then also talk to me a little bit about how your journey's gone, in terms of what you thought was going to happen versus how it's played out.
Yeah. So prior to founding OSITE, I was the head of portfolio management at an outsourced CIO shop. Right? We were managing $5 billion in AUM across 21 different endowments and foundations. And we were a team of 7 people. And every single month, we would spend 75% of our time simply trying to gather data from like dozens of sources, right? Custodian banks, alts data aggregators, hedge funds, private equity funds, before we can really understand, get a good picture idea of like what's our asset allocation to these managers and what is the risk profile across the total portfolio. Before we can, what is the client's cash needs that's coming up, every single month. And before we can make any real investment decisions, right? So it was it was a very risky and cumbersome and in many ways an error-prone process, right? And one of the things that I took away from that was kind of the light bulb went off for me, right? Like, okay, I'm not the only investor who's struggling with this, right? There are thousands or tens of thousands of allocators like me who are struggling with these very same challenges. And that was also the time when the market forces were also changing significantly, where allocations were being made, significantly moving money from one place to another. And in most cases, it turned out to be public markets to private markets, right? And that creates a lot of liquidity management challenges at the total portfolio level for these LPs. And so that was the core reason why we founded OSITE and said, okay, we're going to go and solve this problem around data. And what we saw was this missing infrastructure layer for multi-asset investors. How can they make decisions in a smart way, in a holistic way across the total portfolio, across asset classes, and with the unified data and investment workflow management system, right? That was a solution that we set out to solve. And happy to say that we started right around the middle of COVID. In late 2020 and early 2020.
It actually turned out to be a good time, right? A lot of people.
It turned out to be a good time. We had, I have 2 kids. My older one is in high school, but my younger one, is still in middle school. In elementary school. but he was in kindergarten at the time, right? I'm sure people who have kids and young kids especially remember the time, when your kindergartner is sitting on a Zoom call all day.
Right.
That was a very nightmarish scenario, right? So that's when we really started OSYTE. So my co-founder, Salappa Gopalaswamy, and I came together in the end of 2020. One of the key things that many people miss about our industry is that minimum viable product, like the people talk about it in the Silicon Valley terminology, right? Does not work, right? Because we are working with these large allocators. Somebody could put a $10 million, $100 million trade on day one, and things have to work correctly from a regulatory standpoint, from a cybersecurity standpoint. So there's a lot of constraints that a lot of hurdles and thresholds that we had to kind of meet, right? And it took us about 2 years of really thorough product development, thinking through what are the core problems and how can we solve those problems with the technology that was available to us right at the time. And so it took us about a couple of years to kind of get the platform to that initial high quality threshold. So we had to get our some listeners may be familiar with this idea of SOC 2 Type 2 compliance. Right? A lot of the SaaS platforms out there, right? They require that type of a cybersecurity and audit controls, right? So we had to get all those cybersecurity controls and audit controls done before we can even sign our first proof of concept client.
Yeah, that's interesting. I think given that you're the sensitivity of the data that you have, the fact that it's a trading application, that means it really, no fault tolerance type of thing. It needs to work. Like your MVP is really high. Let's put it that way. I think a lot of times firms or product teams will kind of abuse MVP because as an excuse to kind of ship something quick. And believe me, I'm all for an innovative approach, but MVP is the minimum viable product that somebody will actually pay you for that product. That means it needs to eat a certain value threshold, not just a certain deliverable threshold because you want to ship something sometimes. So I think I'm still a big believer in lean and MVP, but I see sometimes it gets a little abused. And family offices in particular have been allocating more and more capital to private markets. The endowment, the multi-asset class investment model has been in favor with family offices for decades, but that shift has shifted over time to more private markets, which has certainly caused liquidity problems for families. The ability just to be able to understand their liquidity. Can you talk a little bit about that and how?
That's a good question. I think liquidity is a core function of any allocator, right? And the more the more varied types of investments that you have in your portfolio, for example, liquid securities like ETFs and mutual funds, most folks have it. They're still a core part of most portfolios, but today they may only make up about 40 or 50% of the portfolio. The other half of the portfolio is around semi-liquid securities. It could be a hedge fund that has these very complex liquidity profiles. Like, for example, it could be investor gates, there could be audit pullbacks, there could be soft lockups, hard lockups, and these different managers may have these different
liquidity gates based on full moon schedules.
Yeah, exactly, right. So this very interval funds are a very common thing that a lot of clients are allocating today. And these interval funds may have these underlying investments. Could be a private equity fund, but it's put in an interval fund wrapper that has these periodic liquidity, right? So that for the allocator, then they need to figure out not just what to buy or what to sell, but they also have to figure out when to buy and when to sell. So that's a very core thing that we do for our clients, right? We help them manage the liquidity terms profile of these different managers, right? Around what I would call semi-liquid securities. It could be an SMA, it could be a hedge fund. But then on the private market side, you asked, right, how does the capital call schedule work, right? There are two things, right? Most folks know this, right? When you commit capital to a private market investment, right, you're not giving them money on day one, right? They will draw down over several years, right? So what that means is that the allocator then has to plan how they're going to invest that cash today. They're not going to sit in put everything in cash and not earn the market return, right? So what we have done is we've built this investment algorithm models where we can help the allocators figure out where can they invest that capital today, right? In the public market sphere across the other parts of their portfolio, in terms of a proxy risk and return allocation. And then we also have these automated workflows to get capital call data from the various GPs. So when that capital call comes in, we can help the LP team actually manage the capital call, being able to say, okay, I have like 100 clients that I'm working with, and now I got like 10 capital calls coming up next week, and 5 of my clients don't have enough cash in their cash account to meet that capital, right? So now we need to go and raise the money from these for these particular client portfolios, right? From the public market investments, and that's what we do in a very automated fashion from an end to end, right? So we get the capital call, inform the LP, saying, okay, you have a capital call here, and oh, by the way, you don't have cash in the cash account. Now you can go and get the cash from other parts of your portfolio, right? That's one capital call workflow, right? That's like you've already made a commitment, and you're getting these capital calls, and how do you invest that cash smartly in the interim until you get the capital call? And when you do get the capital call, how can you automatically go and get the money from the place where you put the money in the public market investments, right? And then we make that available right away, right? So just-in-time liquidity, right? So the other important thing is like, how do you plan for the next like 3 or 4 years, right? From a pacing standpoint. So we also help these LPs forecast out, okay, for different asset classes, different strategies. It could be for private equity or venture capital, buyout fund. It could be a private real estate or private debt, right? So we help them forecast out what are these cash flow that you should be expecting from a capital calls and distributions, the typical J curve, right, that everybody's familiar with, right? And then the key thing is you take that information and then marry that with the rest of the portfolio, right? Because guess what? On the rest of the portfolio, you're going to have like client cash flows, inflows and outflows coming in. The public markets are going to also be moving, right? So, we need to kind of figure out, okay, here's the cash flow that I expect to have over the next 4 or 5 years. But then how do I think about that in the context of the rest of the portfolio? And then how do I plan my allocation between public and private markets over the next several quarters, right? So that's a very key component that's missing today. And that's what we try to help our clients.
Yeah, I mean, you talk about these scenarios, and they're complicated on an individual LP basis. But then the problem is, as you noted too, is that it's times by to be hundreds. That scenario, and the person that needs the money isn't necessarily the person that has the cash, and on and on it goes. I think what's interesting, and we talked about it a couple different times, and I think it's probably even more important or so foundational that without it, AI becomes irrelevant or not useful is data, right? So talk to me about the importance of data. Talk to me about why having that high quality data, that transparency is so important to be able to understand your risk and to be able to properly manage your portfolios.
Yeah, as you correctly pointed out, in the investment world, right, data is the fuel that propels the investment engine, right? Without that fuel, your engine's not going to work, right? So it's going to just stop, right? So I think one of the core things that any tech provider, including OSYTE, we need to do is to make sure that the data that we're getting, right, from multiple sources is one, validated. It's like, okay, this is the right data or not. And then how can we help the LPs, cleanse that data? How do we how can we identify flags, in terms of what are potential errors in that data? And especially from a clear, error reduction standpoint, right? So those we get data from multiple sources, multiple custodian banks, they all data aggregators, reporting platforms, and it's our job to kind of bring all that together and provide the LPs with a single pane of glass view of, especially around data, right? At the beginning of this call, I mentioned, right, there are different data silos that I saw in my career, right? And we're trying to solve that core problem, right? Instead of like an LP having a data silo for like public equity and a data silo for private equity and the data silo for like real estate, right? We're trying to bring everything together and then looking at it holistically from a true investment book of record, right? How do you know exactly what you're holding and what is in those holdings, right? And then what are the risks around that? What are the liquidity needs around that? What are the liquidity terms of these different managers? And then we can help them, power all these different workflows, or whether it's for like portfolio rebalancing or trade order management or cash flow management or capital call management, right? All those things come after you've gotten the really good data set, right? So.
Yeah, I mean, so much of that data too is especially on the private side is all unstructured, right? The ability to take a look at a subscription agreement, be able to understand the terms in the subscription agreement, be able to analyze these valuations and capital call statements that have can have lots of different information in it. K1s, especially the footnotes alone, can have a ton of information in them, right? So you talked to me about data silos. Obviously, I think a lot of multi-asset class investment managers are dealing with application silos as well. Yep. How does your approach differ? And then what are some of the pain points that you're seeing with that kind of, why does that break down, and how does that break down when you're using all these different applications? And not only I think these applications could cause that data siloing to a certain point, but you're obviously not being able to get that full view.
Yeah, good question, right? But I think I'll clarify one thing. You mentioned K1s, and you mentioned like unstructured data extraction, right? Just to be clear, OCIO does not do any of that stuff, right? We work with our partners, right? Else data aggregator partners, who actually have these, capabilities to kind of extract get the K1s from the different GP portals, or get the NAV statements, or get the capital call statements, and they extract that data and they pass it on to us, right? It's a very seamless workflow, okay?
However, that's like an Arch or a Canoe. It
could be an Arch. We have integration with Canoe. We partner with other firms like that, right? So absolutely, yes. But in terms of your other question, right? In terms of, I think you were alluding to the fact that, hey, is it really best of breed solution, or is it more of a platform, right? I think that's really the LP's dilemma, right? That everybody's trying to solve for, right? I don't think the way I look at the market today and the way that the investment things are structured, right? I think for these big groups of investment functions, if you would, I think a platform is important. But there is no all-in-one platform that does every single, part of the investment function, right? Let me elaborate a little bit on more of what I mean by that. Right? So, for example, you may need a platform like OSYTE to do multi-asset portfolio management, okay? Because that multi-asset portfolio management requires several best-of-breed functions, right? We may need one for rebalancing, one for trade order management, one for cash flow management, right? It's a very, very cumbersome job for the LP, even to just go and figure out, like, can I go and buy like 5 or 6 different best-of-breed solutions and try and put it together into a multi-asset portfolio management, right? That's a very inefficient use of the LP's time, right? So I think in that case, right, I think a platform like OSYTE would be the ideal solution, right? Multi-asset portfolio management from end to end. However, we don't do reporting, right? A reporting could be like someone like Adapar, or, it could be someone else, right? And in that case, right, for Adapar to do reporting, they may have to have like a bunch of best-of-breed solutions within that, right? So I think my recommendation when I talk to LPs, especially, is that you don't think about these platforms as like these big chunks, and let them do what they do best within those best-of-breed solutions within that, right? So, for example, OSITE does these best-of-breed in terms of multi-asset portfolio management with like 5 or 6 different like core features. And then Adapar does best-of-breed what they do from a reporting standpoint, right? Yeah. And then you have to put those two platforms together, right? So multi-asset portfolio management and then a reporting platform, right? So we have integrations with Adapar. They're a good partner for us, and we work with Adapar. So that's the way that I think about how the industry is evolving, right? So you're finding these core platforms that do these functions in big chunks, and then you put like 2 or 3 chunks together to make that end-to-end investment function happen across the front office, middle office, and back office.
Yeah, I think that's a good point. There's not really a all-in-one silver bullet that does it all, or I think there might be, especially front office and back office, the ability to do that. But then, on the flip side of that, do you want 100 different point solutions? Do you want an equity rebalancing tool? You want to do the privates are still done on some sort of Excel spreadsheet, I'll figure it out at the end. I think it's also really interesting that solutions like yours are kind of showing the innovation that's coming to the family office marketplace. There's been a lot of technology progress in the back office in terms of data aggregation, multi-asset class reporting. It used to be back in the day, you had a reporting system for equities, a reporting system for alternatives. You had to pull it together in Data Mart or Excel or something like that. That's been solved for a while now in terms of having multi-asset class reporting. Then you also see the APIs and these other point solutions coming in, the canoes, the arches. There's a number of different solutions. So Subscribe, Delio. I mean, there's a lot of innovation that's happening on alternative investment, data aggregation, analysis. Obviously, AI is unlocking that, and the ability to have APIs to be able to integrate it, which I think is fantastic. And now you're really kind of seeing it. It finally, there's a chance with these family offices to piece it all together. Let's talk about AI in particular. AI in investment management, AI in the front office. McKinsey had a recent white paper showing that AI is going to reshape asset management, the ability to kind of save between 25 and 40 basis points, the ability to be able to reverse what has been happening is a lot of firms of just increasing their tech spend, and not getting a lot of, I would say, innovation out of it. They're just being able to kind of keep up with tech debt. How do you see AI kind of impacting the front office? And where do you see that innovation and change taking place in the front office?
Today, the way AI has been implemented at many investment teams is really around, the front of the investment process and the tail end of the investment process. What I mean by that is there's a lot of AI around, like generative AI in particular, right? Helping the advisor or the consultant or the family office to kind of really figure out, okay, I got all these documents that I need to deal with, and I got all these, investment stakeholder engagement that I have to do. How do I help? How can AI help me prepare, take meeting notes, and and all these other, mostly like Gen AI focused functions, right? I think that's been solved pretty well, and that's definitely helpful for these allocators, right? But that's on the very, very front end of the process. And also where we see AI being applied is around the end of the process, where you are reporting back from a performance standpoint or other kinds of reporting standpoint, right? You're reporting back to your client what you did, right? I think there's a lot of AI application that's been solved. But the biggest gap that we see today is like the core investment function, right? That's where the gap still is. That's where the AI is really nascent today. So there's a difference between like generative AI, which is what, the front office, document management, or unstructured data extraction, and, meeting notes, and all these things are using. They're using generative AI, right? But what the middle of the process, which is the core investment function, right? That actually requires a different type of AI. Again, there are applications for generative AI as well, especially around like liquidity terms management, right? Because you may have hundreds of managers and they have these very complex liquidity terms, right? And I think there the key thing is, one is privacy, and then the second one is also NDAs, right? A lot of these managers have these NDAs where like they don't want the LP to share that information with like a publicly facing LLM model, right? So we have to kind of have this way to figure out like a private data set, right? How can we use a private models to extract these complex liquidity terms, and how do we train that model to provide context around what it means, right? In terms of liquidity terms across the whole portfolio, right? That's a core challenge that we are solving today. And then the next layer of that, I would say, is orchestration, right? We're using like Agentic AI, for example, right? So Agentic AI is really around like Gen AI is about like data and data extraction. Agentic AI is about actually getting things done, right? If I have to do a rebalancing or a trade order management, I have to do like 5 different steps. Okay, I need an investment algorithm model. I need all this data from different sources. And I need to have APIs across this, right? So what the Agentic AI's job is to orchestrate all those coordinating functions, right? And that, I think, is the next evolution of how AI can impact, especially the investment, the core investment process, right? At these allocators.
So this Agentic AI is going to be executing these predetermined workflows, like that capital call workflow, for example.
Exactly, and you already have those automation, functions, algorithms, right? We already have it. Now the next step would be like, how do we string those together how do you orchestrate that? How do you orchestrate those actions using Agentic AI for the system to kind of automatically do it, right? But then it's going to take some level of trust to get like the AI. So I think it has to be an evolution. So you build these Agentic AI frameworks, and then you still have some human in the loop, kind of making sure that the system is doing things correctly. over time, as the agentic AI builds trust, then the human can hand over that job function to the AI. So that's the way that at least we are envisioning from our product roadmap standpoint. And that's the way that we are envisioning how we think the industry is going to evolve. Are we going to be right? Are we going to be wrong? I don't know. It may take another couple of years to kind of prove it out. So.
I think agentic AI is that co-pilot, right? That is really enabling these teams to be, so much more productive, executing these tasks semi-autonomously. That human in the loop is still very important today. Looking out, do you see like when it comes to decision making, do you see that the human element's always going to be involved, or do you see a certain component of actual decision making being moved to the AI and AI taking over decision making?
I think that day is not that far. And I think there are two key categories, right? There are systematic investment decisions, and there are qualitative investment decisions that require like significant amount of trade-offs, right? So I think systematic investment decisions is where I think agentic AI and other types of automation and technology tools can make a big impact. And a lot of these allocators, right, multifamily offices, family offices, and outsourced CIO, they're spending a significant amount of time and energy and resources and money on these systematic investment functions, right? And that's where you alluded to the McKinsey report, right? That's where I think technology can actually be a significant benefit, where you can actually reduce the cost of that systematic functions dramatically, right? But on the other hand, there are like some core investment officers, CIO functions, like a portfolio manager functions, right? That requires significant trade-offs, right? And judgment, right? Those functions are like, I think it's pretty far off. I never say never, but those are like way, way, way off, right? So I don't think there's any CIO out there who's worried about like, oh, is AI going to take my job? I don't think so. Not anytime soon.
Yeah, probably not. What other tech trends are you seeing in the industry?
A lot of the tech trends that we're seeing is really around workflow automation. One of the things that I also worry about, like, okay, AI is doing everything. What are humans? We as humans going to do? What is going to give us purpose, right? So I don't know the answer to that question, but that's something that I think about a lot. And in fact, I was having conversation with one of our investors yesterday, breakfast, and he's an entrepreneur. He's had multiple companies and he sold multiple companies. Even he was saying the same thing. His latest company is AI for semiconductor manufacturing, right? So they're automating a lot of these things. He was like, oh, there's a lot of commonalities between what they're doing, they're doing, and what OSYTE is doing around automating, functions for investments, right? But I think we were still wondering, like, we don't know what we don't know when it comes to these technology trends, right? How they're going to transpire and what impact they're going to have at a broad societal level. I have no idea. Yeah. But I think there's something that we all entrepreneurs and industry practitioners have to keep in mind, right? How can we build the next generation of investor without without really cutting them off, at their knees, right? Right. Giving them a training ground, right? So that's something that we have to think about, really, really hard and figure out a way to make that the store, right? The school, how do you going to build that school? How do you make that process, not be short circuited by technology? So.
I do get worried about those more entry-level jobs. Kids coming out of college today are having obviously a tougher time in the job market, coders in particular. But there's it's rippling through all sorts of industries. And if you're not able to kind of get that, hey, I got 1 to 5 years of experience and the tasks that you used to do to be able to gain that experience in those jobs, and those tasks all get automated, then you're only left with senior people. What's going to happen as people come into the workforce is certainly concerning. I think obviously firms and individuals need to be really adept at AI and prompt management and know those. I do worry society impact. I mean, I don't think how social media went. Like I don't think that wasn't a great roadmap. I don't think that there's been as much negative impact on social media as there has been on positive.
Yeah.
I do think there's greater hope for AI. I mean, you're looking at something that's like literally like electricity or the steam engine that could revolutionize work in society, as long as it has the proper guardrails. I mean, it's definitely like you said, the future's a bit unknown on that, though. We've already touched on the best of breed versus comprehensive. I really think your thoughts are really interesting on that in terms of it's not like an all or one, but maybe kind of taking a look at these big chunks, right? Of being able to have you're still going to be in a multi-platform environment, but is you're looking at more platforms versus applications. Can you talk to me a little bit about that?
Yeah. Yeah. I think the core is, as an allocator, so I have to decide, okay, what are the big chunks? What are the big important levers in my business, right? One is this portfolio management, the actual investment decision-making engine. That's a big chunk of
Yeah.
my business. The other chunk of my business, like, okay, in the front end, right? How do I go and acquire clients, right? And that's another big chunk of my business. And then the back end is really how do I engage with the clients that I have, and how do I report back to them in terms of what I did for them, what value did I add for them? I would say that those like three big pillars, right? So for each of those pillars, it is totally okay to kind of find the best platform for that pillar, right? So find the best platform for that marketing pillar, find the best platform for that portfolio management pillar, and find the best platform for that performance reporting pillar. Okay. But then you have to make sure that those three pillars are actually interoperable. They're API driven. They can connect with each other. That it's not your job as the allocator to go and put those three things together, right? The ecosystem of vendors, we have to do a better job of having that integration up
Yeah.
front so that we can provide the whole solution to the LP, right? So I think that's been our foundational philosophy as well. From day one, we are very agnostic to who we connect with. We will connect with anybody, we'll get data from anybody, and we'll give data to anybody, right? If an LP says, hey, you need to give all the investment data, that came out of the OSITE platform to Addepar for performance reporting, absolutely, we'll give it to Addepar. So I think that is the key thing that I would recommend that allocators keep in mind is like identify the pillars, and for each pillar, find the best platform, and then make sure that those platforms work together. You don't have to go and within each pillar, you don't have to go and don't try to go and find the best of breed solutions within each pillar, right? That's extremely cumbersome. Now we're with like 15 different, 20 different.
Yeah. Real science
That
experiment.
becomes a nightmare. Yeah.
Yeah. I think that makes sense. And then, but there's still, you're a platform play, but you're still recognizing that you need to be able to plug into your LP's tech stack, that your LP has these other core functions that you don't do, you don't want to do. It's not part of your bailiwick, but you still need to have that interoperability. I think that's a great take, Charles. I think this is really one of the better explanations I've heard around best of breed versus comprehensive. It's not like this giant monolith versus 100 different point solutions. There is this kind of you can have these systems that are doing multiple functions, platforms, you say pillars that need to interconnect. I think that's great. I also love the passion that you bring. The people on the audio podcast may not see like the hands moving around and the description of that. So if you're listening, go check out the YouTube video of it because there's
So
a lot.
I used to live in Italy. I love telling these stories, right? I used to live in Italy like a long time ago. So this was back in the late 90s. And I have a lot of friends in Italy. This was in southern Italy, around Naples area, right? And Italians are very animated people. And that's why I think picked it up. I talk with my hands just like most of my Italian friends,
I love it. I love Italy too. I love the Italians. I had a chance to my nephew was stationed in the Navy in Naples and had a chance to go out there and
I was
went to
living not that far
Capri.
from that naval station. Yeah, naval station.
Yeah, love it. Love it. And that pizza, like you really, it doesn't like seem, it must be something in the water and in Naples. It doesn't seem to transfer
It's the
beyond it.
soil, it's Vesuvius soil, right? The tomato has to come from that volcanic soil, right? San
Yeah.
Marzano tomato, Fior di Latte from that water buffalo, that's in the Naples area. Yes, that's how the
I
pizza.
love it. Well, I like to end the podcast on a personal note with three questions that have nothing to do with wealth tech, and we're already into it, so that's great. You also had a chance to travel with your family in an RV in New Zealand. Can you talk to me a little bit about that experience and what was the best part of it?
Yeah. That was one of the. I think that was right around the time when my wife was going through some very significant health challenges, and she was able to kind of overcome that. And so this was more of a celebration of life that, kind of really brought our family together. We rented an RV and we traveled across North Island, South Island for like almost 2 months. And
Nice.
I would say the best experience of that was when we went to Abel Tasman National Park in the South Island of New Zealand. And so there, we got to experience this really unique Maori culture, which is the native Polynesian people in New Zealand. So when we were there, we were doing kayaking and all the other kind of touristy stuff, and that was great. But then there was this group of young Maori men, who were having their version of the summer camp. And so when we were there, and they were like, "Oh, would you like to participate in this native ceremony called the haka?" Haka is kind of a war dance, as well as
you see it in the rugby.
Ceremony. Yeah. And so what they did was, so they actually performed a haka for our family. So they were training for that haka. So they actually perform a haka for us on the beach, and that was like one of the most magical experiences of that entire trip. So it was phenomenal.
Yeah, I've seen, if people are listening, what is it, the New Zealand Blackleafs, which I think is one of the greatest sports franchise, like the Yankees, when it talks about winning percentage in rugby.
Actually, the Kiwi All Blacks, yeah.
The All Blacks.
If you haven't seen it, you can actually go to YouTube and you can find, search for Kiwi All Blacks rugby, and you will at the beginning of every game, the entire team will perform a haka. That's more about the war style of haka, not the welcoming style of haka.
So, okay, there's two different ones. That's good. Yeah, you don't want to doing that to your family, giving a war haka, right? Yeah. That's awesome. So you had a chance to immigrate from the U.S. I don't know exactly. Did you go to Italy first? You came from India. Could you describe your journey of coming to the U.S. and what you first remember?
Yeah. No, I mean, I came to, in my late teens, early 20s. Yeah. But so I actually came directly from Chennai, India. I never been on a plane, before I left my hometown. And yeah, I came to Iowa, and one of the biggest things for me was I'm like, everything was so big and so clean and so well put together and so organized. I came from this land of chaos, and then there was this land of serenity, right? So that was an amazing experience, and also how cold things were. So Chennai is on the equator, so there is no variation in climate at all, right? The sun rises at 6:30 a.m. in the morning, and the sun sets at 6:30 p.m. in the evening, every single day, every day of the year. But not in Iowa, though. So I did experience some of the most coldest weather I've ever seen in my life. At one point, I believe it was negative 65 degrees. Including wind chill. So it was just
comes right down from Canada, right into the plains, right?
Exactly.
That's cool.
That was my first experiences, of America, coming to America. So.
I think it's one of those things if oil freezes, should you live there? If you have to plug in your engine block, that's probably your clue that maybe.
But I do have to say, some of the most amazing people are Iowans. What an amazing state. I still have some very good friends in Iowa. One of my best friends, Sean Montgomery from Iowa, who went to school with me. Yeah. Hey, Sean, if you're listening, hello.
Shout out to Sean. Hey, Charles, thank you for sharing your personal story as well as your great insights. I love your passion. I love what you're doing at OSYTE. And thanks for being on the podcast.
Mark, it was a pleasure talking to you. And again, I appreciate very much having me on this podcast. Yeah.
Thank you so much for watching this episode of the WealthTech podcast. I appreciate your viewership. If you found this episode insightful, please like. Also, please subscribe so you don't miss future episodes. This episode is brought to you with the generous support of Risk Clarity. Risk Clarity simplifies the complex for family offices. Thank you for watching. Take care.